Hey, it's Dean O'Dell with 7 Gables Real Estate in the O'Dell Group. Today is June 4th, and it is time for the newest version of Tustin Talks. So let's talk about what's going on out there. It's crazy, right? And you're saying, how can people pay these prices? Well, I'm going to tell you how they can pay these prices. They're going to pay these prices because it's still affordable. And you think, wait a minute, what do you mean it's still affordable? It can't possibly be affordable. Yes, it is. And this week's report details exactly why it is still affordable. Comparing it back to 1980. Remember 1980? Good old days, right? Prices were super low, and it just seemed like, gosh, how has everything gotten so inflated, so expensive? Well, let me just tell you, people were making an average of $22,000 a year in Orange County back then. Interest rates were 13.5% back then. And now people are making an average of about $100,000 a year in Orange County, and rates are 3%. That's what it's about, you guys. Believe it or not, we are still more affordable than we were back in 1980 when you compare it to people's median income. So if you look at that, and you also look at where things were in 2007, we're still 15% below 2007, which everybody, goes back and thinks, well, that was the top of the market last time. Well, it's still 15% more affordable. People have equity in their homes. It's not based on a housing crisis. So I know as much as all of you guys want this market to blow up, it just doesn't look like that's going to happen anytime soon. And the only thing that's going to slow this market down right now is higher rates. And eventually, if prices continue to climb, there will be some kind of tipping point, but it is not going to be some disastrous crash like we had last time. This is not a housing crisis. So I just want to emphasize that. And with that said, now we are going to look at the stats behind what supports that, okay? So looking now at the Orange County listing inventory year over year, I want you guys to look at that red line, 2,255 homes. Start up at that purple line and work your way down. The purple line, 2019, we had 7,300 homes. 2018, we had 5,900 homes. 2020, which is the green line, we had 5,044 homes. Now we are down to 2,255 homes. Look at the difference of that red line compared to previous years. It's just unbelievable, okay? And last year, we had a raising of inventory simply because we were going through you-know-what last year at this time. So, houses weren't selling quite as quickly as they are now. Now let's look at the chart. Well, obviously, if you look at the green line, which was last year, that was a strange year. We've talked about that before. We almost want to throw that out as an historical average. It just doesn't make any sense. We don't have a year like last year every year, right? So now let's look at the red line. Right now, we are at 3,083 homes in demand, right? Then if we look at the previous years, you can see that our demand is about 10% lower. So we actually have 10% more demand and a lot less inventory, because normally our inventory at this time is closer to about 6,500 homes. So we're almost at a third of the inventory. So when we talk about pricing and how is this thing going to slow down, well, we need more than one home for every 3 buyers, right? So it's just too many buyers out there right now. So it's going to take a while to slow down. Just realize that in 2018 and 2019, we had a lot more inventory as our average. Even last year, we had 34% more inventory. Hey, sorry to interrupt this program, but we want to make sure you are subscribed to Tustin Talk, so please click on the subscribe button below. And then if that doesn't work, just go to theodellgroup.com, or you can go to youtube.com/Tustin Talks. Now let's get you back to the program. So look at this chart here. Here's our expected marketing time. Look at how low we are, 22 days. Very fast moving market. Compare that with the previous years, as you can see. Obviously, again, the green line was a strange year. We're almost throwing that out, but you can kind of see the normal curve and how in 2018 it just kept going up. And that was because, if you guys remember, that's when interest rates went up. So it started taking longer to get a house sold, started going back to normal levels because interest rates were rising, and they got almost almost up to 5% by the end of the year, if you guys recall. So this last chart is what I call my favorite chart. You know, it breaks down the expected marketing time by price range. You can see almost every single price range except the last two are under 30 days in terms of expected marketing time. You can see how that compares with last year's numbers. And what's interesting is if you draw a line under the $1.5 million range, you will see that everything above that line has more demand than it does supply. So that's why things are so hot, you guys. So let's summarize this up right now with a little buyer and seller advice. Okay, so just to summarize this for the buyers, you guys, I know you want out. I know you just want to quit and give up. It is so frustrating. You got to remember, we have a buyer's team also. We know what's going on out there. We have buyer's agents that aren't getting houses either. But I'll tell you, you got to keep trying, because once these interest rates go up, it's just going to cost you more. And if you look at supply and demand, you can tell that prices still have a ways that they can climb. If you look at that comparison of median income, historically, we are still affordable, believe it or not, according to historical norms. So it just doesn't look like prices are going to turn around and go the other direction anytime soon. And when they do, it's likely that interest rates will be higher. So if you want a house for long term, go lock it in. I know it hurts, but just do it. Get yourself a house. Getting out of the market right now is not the answer, okay? Advice for sellers. Okay, sellers, I'll tell you what, amazing time to be a seller. I was just a seller myself, and I can tell you right now, I sold some rental property and just crazy what's going on. Even though I felt like the market probably still had legs to keep going up in price, you know what they say, pigs get fat, hogs get slaughtered, right? So I'm out. I'm taking the money and I'm running. And you know what? It's because I'm done being a landlord. So maybe you guys have rental property you want to get rid of also. We can help you with that. But more importantly, if you're just willing to take money off the table, and you know, I mean, this is life-changing equity a lot of people have built in their homes. So California's a great place to be. It's beautiful around here, but a lot of people are taking their money, they're leaving the state, and they are very, very happy. I just had a client whose home I sold for almost $1.7 million. And they took that money to Texas and bought something for 1/4 of the price that's just as nice as what they're leaving. So yes, the weather is not the same in Texas, but everything's trade-offs, right? So now's the time to go. All right, give me a call if I can help you out. We'll get that house fixed up for you and in top selling shape, or we can do nothing at all. It's your house, whatever you want to do. All right, give us a call. Let's get a plan. Let's get a game strategy. Talk to you later. Bye-bye. Hey, don't forget the Odell Group is one of the top 10 teams in Orange County. We have sold thousands of homes. So draw from our experience and let us help you out. Subscribe right now and watch our videos to educate yourself, whether you're a buyer, seller, or both. And then visit our website at theodellgroup.com and reach out. And let's get to know each other so we can help you. All right? Thanks. Bye-bye.